Davis, thank you so much for making time to speak to us. Just real quick on that opening note, let's talk about your general review of this week's markets performance.
Okay, so we experienced a lot of volatility within this past week when the president was first, or rather, when the court case was sorted out, and then there was some normalcy that returned to the market. There was increased activity, and you could see some interest with equity starting to pick up. Global uncertainties, such as the inflation report that came out in the US, which led to significant sell-offs on the S&P, the Nasdaq, and the like, that trickled down into Kenya because investors now expect that there'll be significant rate hikes, which means more dollar strengthening going forward, which means that investing in Kenya has become more expensive. And in a market whereby a lot of the activity or trading is done by foreigners, this means that share price suppression has begun and indeed will continue, particularly on blue chip stocks such as Safaricom, EABL, and you're seeing some of that downward pressure within our market already starting to show as I close today.
Right. I mean, but far from that, there has still been some appetite within the investors' quarters. What have you seen in that particular end from this week?
Sorry, please.
Right. The question is on investor appetite this week. Which areas have you seen investors, yearning to put their money in?
We've seen activity on stocks such as KPLC. So there was reports that one of the political parties, the one which is currently in power, that some of their members have increased their allocation or exposure towards KPLC. So you're seeing those smaller stocks having increased activity. But on the foreigner front, we're seeing heavy selling pressures on blue chip stocks such as EABL, such as Safaricom, as well as the banks. So there was some uptick at the start of the week, but downward pressure has wiped out majority of the gains, particularly on blue chips. And then we're seeing that there's some profit taking on stocks such as KPLC, which is prompting the share price to go downwards. Right. And will likely continue in the coming week.
It's interesting you mentioned that, but then also on one of our top stories, we talked about the Treasury missing the target again in the latest bond sale. The bond sale fell 11 billion shillings short of the target. How do you explain this scenario?
Well, so the bonds were 10 and 15-year tenors, meaning that you're significantly exposed to duration risk as a bond investor. So investors within a rising interest rate market, so as to ward themselves away from mark-to-market losses, choose to invest in short-term tenor issues. So whether it be, especially the 91-day. So last week, the 91-day did 600% oversubscription. So it got 20 billion on the back of demand for 4 billion. So that is what will continue within this rising interest rate environment. The longer term bonds, there's a significant unlikelihood that investors will focus on the longer end of the yield curve, but the interest that is already therein, that's primarily by banks who are doing asset liability matching so as to offset some of the risk that they have. So largely going forward, what you'll see is a focus on the short end of the yield curve. And a lot of the Treasury issues falling short of the CBKs or what the CBK is looking for, say for IFBs, which are tax-free. And so investors will primarily put a lot of interest on those.
Right. Talking of banks, you just mentioned right there. Let's take a look at the counters there. Cross-listed BK Group seems to be doing quite well. It is the top gainer today. What do you think could be interesting investors on this counter?
Well, largely retail investors just trying to put in some money in there because the counter does experience a lot of volatility. There's no significant news that would prompt this, so we largely view it as speculation by the retail crowd.
Right, speculation, but still on the banking sector, what do you see as the effect of what came out of Equity Bank's acquisition of the Spire Bank business?
So there has been some debate over that. What it seemed is that the CBK had prompted Equity Group to acquire Spire Bank, and from the nature of the transaction, it may actually end up being more of a liquidation, but we're yet to see how that plays out. So the initial investors within Spire Bank, unfortunately, have been recording significant losses ever since they made that investment. And so it seems that the CBK, to ward away any undue or events such as Chase Bank as well as Imperial Bank, those are banks that had significant issues and inevitably collapse, is warding away that by having an equity group taking a position and to beef up the capital and the like. So if you compare Spire Bank in comparison to the size of equity group, the transaction barely has any major say within the whole of the group. So it makes up less than 1%, or it should be there about 1% of equity's total assets. So it's not necessarily something major for the group.
Right. All right.